Hey, Steve Farrington here again. I'm here with my buddy Kraig Klaus. How you doing, man?
Incredibly great. How are you?
Fantastic. Thanks for asking. We just wanted to get together and chat a little bit on kind of the current overall feeling of the market and maybe some what people are thinking about heading into 2023, seeing as we're almost done with the first month here.
Yeah.
So,
we're coming off of 6-7 months of a market shift. And a very drastic market shift, and one that people have been talking about, and that word that everybody likes to throw out there, bubble, and all of that. And there's been some obviously headlines and different things on the market and what the expectations are. And so I think we've got some information. We just kind of want to talk about what we're expecting for 2023, what people are talking about out there, and what we're seeing so far this year.
Well, why don't we talk a little bit about what you've seen from the pickup in activity alone from December numbers heading into January, since we're almost done with the month?
Yeah, I think that that hotline or website that all the buyers in the state go to when it's time to communicate together, they got together in like May and decided it wasn't a great time to buy. And it seems like from the first part of the year, they got back together and said, hey, now's the time. Rates have obviously stabilized a little bit in the low sixes. January 2nd, we had about 5,400 homes under contract. We're looking at about almost 8,000 today.
Okay.
So, I mean, you're talking, 2,600 in a month. I mean, that's pretty significant from where we were seeing. And that number had gotten down into the low fives for under contract. So we're seeing activity pick up. We're seeing overall buyer traffic at showings, at open houses. They're back, and they're back out, and they're ready to go. We've had listings get multiple offers, and we're just seeing a lot of positive, encouraging signs heading into the new year, and hopefully some relief, even more relief from rates will be coming at some point.
Yeah, absolutely. And I mean, even new home sales picked up, which was encouraging as well. But as far as interest rates, we've definitely seen them come down from the highs that we experienced past, October, November, that early part where we hit the mid sevens. The biggest thing though, with rates not only coming down, they've also stabilized. Right. So we've removed a lot of the volatility. Like I said in my email just last week, was we've seen kind of just a move sideways in interest rates. So they're fluctuating, up or down maybe an eighth or a quarter instead of huge swings by 3/4 to a point. So,
and I think people are normalizing to this is the market now, meaning, rates aren't going to be at 10. They're not going to be at 2.5 or 3 probably ever again or anytime soon. Prices are not dropping 30, 40%, what some were calling for. I think basically from the peak in May of 2022 till December, we were down about 13%. And I know that headline in the article from Goldman Sachs, and they had mentioned 6 or 25% this year, and comparing it to 08, overall was about 60% value decrease in 08 from the peak in 05 to where the bottom was about a 60%. So comparing 60% to even 25% and trying to say they're equal is obviously, it's a headline grabber, but it's
a headline grabber. And like you and I always talk about, we've had numerous economists that we know and trust, that we follow, that see exactly the opposite. So again, choose your headline carefully. Be a detective, not a troll, when you're looking for facts and certain things.
And keep in mind, too, one thing we've talked about, this is our first real estate market shift with social media. So now everybody has a voice, a vehicle to be able to put out an opinion, and I've said it forever. It's easy to say the market's going to crash, because when it doesn't, nobody's mad at you, right? And everybody's happy. So you can keep saying it and keep saying it, and you might get it right once, but nobody remembers all the times you were wrong.
Well, and just coming from, looking ahead, for the rest of the year, the rest of the calendar year here in 2023, there is some reasons for pessimism. I mean, we've seen some surveys, we've talked about some things where maybe people are a little bit pessimistic heading into the housing market. Again, one of those right there is, they think that home prices are either going to crash, but then there's also quite a few people, about 57% of people that were recently surveyed, said they think home prices are actually going to be higher.
Correct. Which is what I think most predictions are, especially locally. And keep in mind, when you read headlines, that's a national headline. Our market here is so insulated and different from the majority of the country. Over 300 people a day moving here, newer homes, room to expand, and that type of thing. And I think, I've seen predictions from people we trust in that anywhere from 3% up to 7% for appreciation this year. I haven't really seen anybody calling for negative other than on a national level in some cases. But I don't think locally you're going to see that. I think we're already starting to see that turn to where prices are going to start to go back up. The other thing to keep in mind is real estate's always about supply and demand. And by October, we had gotten up to just over 21,000 active listings. We're down to just under 16,000 today.
Okay.
So we have not increased inventory during this time when buyer activity went down. So when buyers, as they're coming back, are finding there's not this abundance of choices that they expected. Now, it's 4 times the amount it was in April of this year or March. So you have a lot more choices, but it's not oversupplied. We're not even balanced supply.
Okay.
Demand returns to average, and we're going to have a little bit of a run, I think. And then if we can get a 5 in front of interest rates, then I think we'll really take off.
I'm working on that. We always talk about, I'm working on it. Well, that's good to hear. I mean, especially here locally, because that's what we need to focus on. The other thing, one of the main reasons for pessimism is, buyers tend to think that we're going to have a worse economy in 2023, which very well could be likely. I think the higher points of inflation, we've already experienced that. So we're definitely on a downtrend when it comes to inflation. So hopefully that'll relieve some costs, get people feeling more comfortable. Wages continue to increase. Now, of course, now the Fed's talking about they're going to be able to navigate a soft landing. There's not going to be a recessionary period. And then those, again, back to the people that I follow, that I listen to, when we're talking about a recessionary period, most of them are calling it short and shallow, meaning that it's not going to be that great recession that we experienced back in 2008, where a lot of people seem to be living still, and it's just not the same marketplace. So,
well, and keep in mind too that we always said that homeownership is the greatest hedge against inflation, and also in 4 of the last 6 recessions, home prices have gone up. One of the exceptions being 2008, which was caused by housing and subprime and all of that. But so a worsening economy or recession does not equal home prices going down historically and typically, and in the valley. Just don't see how that can happen, because again, it comes down to supply and demand, and we're nowhere near have enough supply or even close to being oversupplied. We still have a housing shortage in this country and in this state, and that's not being corrected anytime soon.
Awesome. Well, and the last thing, one of the top 3 things that people think mortgage rates are actually going to be higher heading into 2023. It was almost 60% of people surveyed thought that mortgage rates were going to be higher in 2023, which I don't feel is the case. Everything that I look at forecasted heading forward, including Fannie Mae, Freddie Mac, besides the Goldman Sachs article, which will probably be covered in depth at some point by somebody on our team. But I mean, we're on a downtrend. Inflation's starting to be tamed. The Fed's actions are working. So we've already seen them come down from the 7s into the 6s. Hopefully, as things progress later in the year, we get that 5 in front of it that we're all kind of hoping for. People just have to remember that interest rates don't go down in a straight line. There's going to be peaks and valleys, just like the stock market. But again, we've at least seen stabilization where rates are kind of staying at that sideways movement, and then hopefully we'll have some dips lower and then move sideways again. So yeah, I definitely think we're going to finish in the 5s.
Yeah, and I think you're seeing a lot of the people feeling like they missed out answering these surveys about, prices will be higher, rates will be higher, like we're never going to be able to afford, and that, they're not going to go in conjunction. Prices won't go higher if rates go higher, right? Because buying activity will slow, inventory will build, prices will stabilize. That's what we saw the last 6 to 8 months. So, I think that, like you said, the idea that rates will be higher is highly unlikely from what we're seeing based on where they were. And then they're getting back into that historical average run. And again, that's where we're going to see things kind of go. And I think, like I said, most predictions are over the next 5 years to anywhere from 15 to 22% in appreciation combined. So home ownership is still the best thing that you can do and the best way to build wealth. And the sooner you get in now, you lock in that price, and then you're building equity through the rest of the year, and you can refi down the road, and that's how we're starting to see things turn.
Well, and the big positive, that kind of finished out that survey that I keep referencing, was for the 5th year in a row, 83% of the people surveyed. I mean, it's always been in that 75 to 85% range. But again, even with some of that pessimism, 83% of the people surveyed said that buying a home, those that don't own a home, is a priority for them either this year or next year. So looking at just a 2 or 3 year window, that 83% of people said that buying a home, and we think it's a good idea. I mean, we definitely feel very positive about our market.
Absolutely.
Heading into 2023, and hopefully we can continue with the positive messaging and getting people some of the facts out there.
Well, and keep in mind too that, if you're looking in that range to buy it, that it's the old idea of has to be 20% down. I mean, that's not the case anymore. I mean, there's 3%, 3.5%, 5%. There's opportunity to get into home ownership now. And as equity builds, then you can refi and get rid of mortgage insurance and do different things, but you're starting that building of that process earlier than later.
It definitely adds some stabilization to potentially volatile rent environment as well.
Correct, 100%, yes.
So, excellent. Well, thanks for your time, brother.
Yeah, thank you.
It's always good to see you.
Yep.
And
we're excited about 2023, that's for sure. It's fun to see buyers coming back and the market starting to pick up again.
Awesome.